Hi, I'm Jim McKenna. Thanks for stopping by and visiting my site. I'd like to talk to you today about reverse mortgages. A reverse mortgage technically is referred to as a HECM, H-E-C-M. It's a home equity conversion mortgage. And in my time in the residential mortgage business, which is considerable, 26 years, I've realized there are misconceptions about reverse mortgages. But as the product has gained popularity, I think it's important that we try to dispel some of those misconceptions. And when you think of the term HECM, H-E-C-M, and what it means, a home equity conversion mortgage, it's converting the equity in your home that you've built up over years to help you maintain a quality of life that perhaps you would like to maintain and stay in your home in an environment with ever-increasing expenses such as property taxes, homeowners insurance costs, healthcare issues, prescription drug costs. The home equity conversion mortgage, commonly known as reverse mortgage, will allow you to take the equity in your home and use it in a variety of ways. Now this is for senior citizens. The minimum age is 62 years old, and there's an equation that is employed to determine how much equity in your home you might be able to access. So 62 is the minimum age, and once you're qualified for the home equity conversion mortgage, you can access those funds by either taking a lump sum disbursement, and you can do anything you want with the money. Many people use it to set up home improvements, make the home more accessible as you're aging, getting around into the kitchen and the bathroom becomes more difficult. You can set up trusts for children, you can set up other long-term health insurance concerns, or you can just supplement your lifestyle with additional cash flow. You can take a lump sum disbursement, I think I've said that. You can take the home equity as a form of line of credit and only use the money as you need it. You can set up a term disbursement program where you receive a specific amount of money over a specific period of time, or what's called a tenure program where you receive a specific amount of money for as long as you live in the home, or for that matter, for as long as you live. It is an owner-occupied program, so you are required to live in the home while the reverse mortgage is in place. If such time comes where you are no longer able to live in the home, you have a year. You only have to live in the home for a short period of time in the course of any given year, and if you're out of the home permanently, you have a year to terminate your reverse mortgage. Now, reverse mortgage is just like any other mortgage, except that you're not making payments. When you're young and you buy your first house, you take out a traditional mortgage, you're making payments, and with every monthly payment, you're gaining equity in that home. You're paying down the mortgage. On a reverse mortgage, the opposite is true. You no longer make payments, so the equity is being converted into that cash flow. Many people use the reverse mortgage just to terminate the monthly payments on a forward, what we call a traditional or forward mortgage. You are responsible for maintaining the income tax, the property taxes, and you are responsible for maintaining adequate homeowners insurance on the property, but you are no longer responsible for making monthly payments. One of the misconceptions on a reverse mortgage is that you've signed the house over to the bank. Well, this cannot be further from the truth. When the time comes, you can terminate your reverse mortgage with a traditional refinance into a traditional mortgage, and you can never owe more than the house is worth. It's what's called a non-recourse loan. If such time that your heirs need to deal with this, if there's equity remaining in the house, they can refinance that into a traditional mortgage or sell the house. If more is owed on the house than the house can be sold for, that's where the FHA steps in. The Federal Housing Administration insures this loan and makes the bank whole, so your heirs are not responsible for the deficit between what's owed on the house and what the house can be sold for. This is one of the most common misconceptions around a reverse mortgage. So please don't be frightened about this financial tool. Call me, get the facts, or send me an email. I will send you a free pamphlet on frequently asked questions about reverse mortgages and general bullet points on a reverse mortgage as published by AARP and the U.S. Council on Aging. Thanks for visiting my site, and I hope to hear from you soon.